Seems like we've got a quiet Sunday in the meeting this week, which is fine. So yeah, we had escalations, kind of. And when I say kind of, there's nothing that's really rattled me just yet. And when I say rattled me, I mean obviously in terms of rushing to safe havens and capital protection. So I think it seems like from everything I've seen, everything I've read, it's going to be more of an energies play. So I think it was it Big Mike? I'm fairly sure it was Big Mike. One of the guys in Discord sent in some data from IG Markets, and they said that the pre-market price for oil is actually 5% higher, which isn't huge for oil. And a 5% gap open obviously is relevant, but it's nothing outlandish. It's nothing we would panic about too much. So when we've got escalations, we've also got the fact that Iran threatened the United Kingdom and the United States, basically saying if they essentially help Israel and help defend Israel from Tehran or something along those lines. I can't remember exactly word for word right now, but they will also attack the UK and the US out there. So that's a concern. So far, I don't see any signs of that. I haven't heard anything in terms of America actually being involved. They've helped defend in terms of, I'm fairly sure they shot down some missiles that were coming into Israel or something. Again, I can't remember the exact details off the top of my head, but it doesn't really matter too much. So when we're talking about not being overly defensive just yet, it seems like the markets have priced in already the situation in the Middle East. So if we think about everything that's happened already, we've already had, Russia, Ukraine, we've already had the Middle East stuff. And the Middle East has been at war for a long time. It's only just now starting to become sort of mainstream news, and it's starting to escalate slightly. It doesn't mean that we're now going into World War III. It doesn't mean that anything tragic, and when I say tragic, obviously I mean that word loosely. I know people are still dying, it is sad, but when I say tragic, I'm more talking in terms of market movements. It's not a case of markets are going to open and gold's going to spike up to 3,500 or, well, it could actually go 3,500, it's not that far away, but 4,000 or anything insane like that. Just yet, again, it could completely change if the UK and the US start getting involved and it starts escalating in terms of more countries getting involved in the war, then yes, we might start seeing more panic. But for now, it seems like it is more just oil that's going to be affected. And again, could be wrong. We could see some spikes on gold as we come into market open, but I wouldn't expect it's going to be a case of we're going to start seeing gold rallying off and creating new all-time highs immediately. We did see the dollar hold its ground slightly towards the end of last week, again on the back of the Iran and Israel situation. We did see a slight spike here in the US dollar, but it's not really led to anything. And again, in situations like this, when we've got huge, or what is perceived as pretty large news, you would expect the dollar to do pretty well. You'd expect the Swiss, the yen to be rocketing. You'd expect euro down and gold up. And we're just not really seeing that too much. Gold spiked a bit, but again, pretty negligible really in terms of what the mainstream media is making it out to be. So yes, it's important to pay attention to the headlines, but I wouldn't really overthink it until we start seeing the markets reacting off it. Because let's say you see a headline that's, Iran's got X amount of nukes and has threatened someone. Okay, is that a headline? Is that just fear mongering and doing it for clicks? Or is that some real threat that the markets are now starting to price in? If it's the latter, then yes, you should get involved and capitalize on the momentum and the volatility. If not, doesn't matter in terms of your trading account, ignore it. And that's just the way with pretty much everything. Well, that's the way I view it, at least. So, actual setups. Let's get into it. Let me just quickly go over what we've got open. So, these two trades, I had two on pound yen and euro Swiss last week. I closed euro Swiss at break even last week, and I closed pound yen. I think it was only a 0.3% return. And again, that was off the back of when we saw Israel and Iran kick off a little bit. I wasn't sure it was really the best idea to hold two risk-on trades over the weekend when anything could happen. So, in hindsight, it would have been okay, I think. But again, it just wasn't a risk I was willing to take because I had 1.5% risk on each position. So it just wasn't worth the risk, as I said. So we've got Swiss yen open. This trade's actually break even now, so we're completely risk-free on this trade. which I'll probably just put here. There we go. Yeah, so this trade's risk-free and it's currently running in 1.36% profit. So we've got a nice little runner here. In terms of safe haven demand, we did see a small spike down as we saw the yen slightly appreciate, but again, I wouldn't be concerned with this position. It's more just a set and run now. We're risk-free, and it's not my position to really get too involved with in terms of management or information anyway. Dollar Swiss, again, was a trade by the president, which is our other trader in the Discord. Running very well so far, again, capitalizing on dollar weakness and safe haven demand from the Swiss. Swiss seems to be very stable at the moment. Actually, that's a Euro chart, sorry. Oh, whatever, it's not on here. But yeah, the Swiss seems to be doing very well at the moment in terms of holding its ground. The only downside to the Swiss is when it gets too appreciated and when it starts breaking sort of weekly highs, there becomes sort of global, or when I say global, sort of market fear around the S&B starting to intervene because it's not liked when the Swiss is too valuable. So that is something to just keep an eye on, but right now, it's no problem. The other position that I've got running is Euro Pound. Now, I sent this out, but it wasn't an official signal because of the structure of the positioning. So I deployed a DCA strategy on here on the H4 and daily, got triggered into, the first position was manual, the second position was a sell limit that got triggered in almost perfectly, actually. I'm not really interested too much on the fundamentals behind this. I'm still bearish on the market overall. But to be honest, because it's such a correlated market, obviously Euro or Europe and United Kingdom, we often have these cycles where the market depreciates quite drastically and then has a very short burst to the upside, then decreases or devalues again, then pops, then decreases, then pops, then decreases. And we just had a huge pop. Now I'm looking for this decrease in value. So it's more just a sort of mean reversion market pattern type of trade. So I'm happy to hold this. It's very low risk. But again, I didn't send it as a signal just because I don't know, you know, we could have someone new in the Discord that says, oh, there's a new signal, I'm going to go 20% risk, and then is going to lose their account. So that's why. Okay, so let's get on to trade ideas. Oil, I would like to buy oil. I think it's proven itself. It's broken out of this sort of downtrend that we're in here. We have very clearly seen bullish movement here, obviously reflecting buying interest. Now, you could argue this is from the war. I would disagree. Obviously, this sort of movement here, yes, that was due to Iran-Israel. But we started breaking out before that, back on the sort of 10th to 11th of June. So I'm still in the mindset that there are buyers in this market regardless of what's going on in the Middle East. That Middle East is just a nice catalyst to layer onto that buy idea. So I'm looking for price to come back into this sort of 50%, 0.618 pullback level as we do, looking for this fib, and then a continuation up to sort of previous highs. Whether it is just up to sort of the 76.1, or if we take it all the way back up to sort of towards $80 a barrel, I'm not really too bothered about the target just yet. Obviously, we need to focus on getting into the market first. Stop loss would, actually, let me just mark up the trade, it's probably easier, isn't it? Stop loss would need to be, in my book, at least around 59 or just below 60, because we've got these lows here. So if these lows are broken along with this fib and this moving average, then likely oil's going to come back down into these lows. So I don't want to sit through that. I'd rather just get out of the market once it's invalidated. We did also see institutions buying oil as well last week on the COT report. So this is interesting because it was a large amount of long contracts, pretty large amount of short contracts as well, but the long contracts is a lot. Net change is very bullish, at 3% or 2.99, 3% net bullish change or long change. Overall net positioning is still very long. So institutions are clearly either in the know, did they know something was going to happen? I don't know, maybe a bit of a conspiracy theory there. Not going to go down that rabbit hole though. The Aussie New Zealand is in an interesting spot. Why is my analysis not loading? There we go. Yes, okay, here. So what I want to do on Aussie New Zealand is actually start a DCA position. Now, it might sound a bit silly to do on the daily to some people, but this market, because again, similar to Euro Pound, because the Aussie dollar and the New Zealand dollar are so heavily correlated, this market really just stays sideways. There isn't any trade. In fact, there is absolutely no trend in this market since sort of 2014. So why not just play ping pong with it? Now, obviously, it's a little bit difficult to do on the daily because we'd have to wait for, quite a while for these lows and highs to get hit. But there is no reason that we can't start buying the market once we come under this fib. So obviously, at the moment, we're sort of hanging around equilibrium or around this 50%, 50% of this range. But once we start breaking below, similar to euro pound, I'd be quite happy to take a really low risk long position here, another one here, and another one here. So if the market decides to come up or here or wherever, that's completely cool. Very, very basic trading, very simple, but it works. I mean, historically, again, since 2014, if you were just buying below this 50% level, you would have been making money. Obviously, again, you could have been holding for months, but it could have been a very profitable position to take. So I'm going to have to dial down that one. It's not a fully in-depth trade idea just yet. It's more just a rough idea. The Euro New Zealand seems relatively strong. New Zealand dollar is likely to be impacted quite heavily by Israel and Iran if that does continue to escalate. China's oil imports are made up of 15%, give or take, from, I think it was from Iran. So obviously if there are supply constraints, oil goes up. That would be bad for China, bad for the New Zealand dollar. So we could very easily see this market come higher, back into the most recent high at around 1.9. I think that would be a very sensible trade. So I'm just looking for the same setup as always, looking for this 0.5 to 0.618 level. There's 200 moving averages right here. So if we can reject these highs again, come back down, retest, then continue higher, I think this would be a great trade. I think it's, again, very simple sort of bread and butter positioning. It would also make a really nice breakout trade because we've been stuck within this sort of sideways range for quite a while now. In fact, April, May, June, almost 2 months that we've been sideways. So yeah, it would be quite nice to come back up and fill some of this left side. In terms of the euro, let me just pull up some euro data. Just give me a second. So ECB cut rates to 2% as inflation nears target. Dovish pivot amid weak growth with further easing possible if data softens. So the ECB is not necessarily really doing anything. From their last meeting, it sounded more like a just wait and see. Very Fed, it was very Fed vibes. When Powell sits there and he just says, data dependent, maybe we will, maybe we won't. Pretty much the same. So we just look at the central banks for a second here. Oh, by the way, there's quite a few more people in here now. We've doubled in people. So hello, everyone. Phantom, you've not missed that much. I'm just going to leave this on screen for a second. Let me just quickly recap. Phantom, we just went over some of the trades we're in. So dollar Swiss, Swiss yen, and the euro pound DCA position I've got. We also briefly spoke on oil, and I also said that the Iran-Israel situation, to me right now, doesn't seem like it's going to be that bad. When I say that bad, please, when I say things like that, I don't want you to think I'm trying to be disrespectful to people that have died during all this situation. What I mean by bad and all these types of wording I'm using, it's specifically towards markets and price movements. That's it. I'm not here to be on an ethical side or anything along those lines. I'm doing my job, okay? I just want to clear that up because I got some hate on TikTok for making a video about what I'm doing and what investments I'd be looking to take if this did escalate. Anyway, Fed's holding, ECB's holding, Bank of England's holding, Bank of Canada's holding, BOJ's holding. The RBA, it seems like they're going to cut, but it's not overwhelming. It's sort of just under a 50-50 percentage. RBNZ hold, and the S&B is looking to cut. So it doesn't give us much room to trade interest rates right now. As many of you guys will know, I am an interest rates trader. I like to trade divergences. So I like to find one central bank that's hiking, one that's cutting, one that's holding, whatever it may be. Just that sort of discrepancy can really drive trends and really drive markets. But there just really isn't that at the moment that I see. So this one on the US 30 could be great. It also could be straight to stop loss. So I'm not going to take, obviously I'm not going to trade the Dow out of session anyway, so I won't be taking this trade until tomorrow, New York session. However, the technicals right now look great. And again, I'm not expecting the Iran-Israel situation to really be that much of a market mover, especially on the Dow just yet. Obviously, again, that could completely change, but right now I'm pretty stable in that idea. So when we see invasions, we see sort of warfare, geopolitical landscape warfare, we often see these types of markets. So the S&P, the Dow, NAS will often take a hit. Even gold does the same thing. And it's more like, oh God, what the hell has just happened? I need to get out of the markets. So people will immediately reduce positions, regardless of what asset it is. Like I said, gold does the same thing if you go back and look. It's like people go straight to cash, then go back into the markets, whether it be gold or whatever. Now, this is a very tight position, so I'm not talking about this one specifically. But if we do start seeing these, like the S&P, the Dow, the NAS start to drop off this news, I would be more inclined to actually buy into that drop, not sell into it. Again, historically, we actually see more upside after the invasion, or as the invasion sort of is priced in. So that's been said, I think from a technical view, we're obviously at this fib level, previously used to structure. We're at this 200 moving average as well. The RSI is coming down into a relatively oversold area. I think we could very possibly get these markets back into all-time highs. So obviously we've still not fully recovered. And when I say we've not recovered, I'm talking about the US markets. The DAX has had a parabolic run, but the US markets haven't really caught up just yet. I think there is some room for these markets to continue much, much higher. And over time, they drift to the upside anyway. So if we could catch some sort of runner, we could be in for some serious money by the end of the year if we were able to just hold and trail stops. Obviously, assuming that these markets don't suddenly just crash off war escalations or whatever it may be. But yeah, I think the Dow could be a pretty nice pick. Euro Swiss. Now, this is very similar to the Aussie New Zealand trade I was telling you about, although slightly different. So this market, if you draw the fib from low to the high, obviously within this whole range, we get this 50% 618 level that's been acting as a really, really, really nice support since start of April, really. So over a month. Now, unfortunately, this was a trade we were in actually last week. Unfortunately, I didn't really notice this setup actually, with obviously the highs, lows, and the fib and the support, which was a little bit of oversight on my view. On my part. In hindsight, I should have set a sell limit at this low, but I just didn't notice this idea. So this is the new idea, because I'm still bullish on this market. I think that we've obviously seen a little bit more pressure and risk off, but I'm not sure that's going to really lead to that much. I'm still relatively bullish on the euro, especially compared to the Swiss. So if we can get one more push into this support, I would be more than happy to start taking long positions. As again, we've got the ECB holding rates very cautious at the moment, and we've also got the the S&P, which is Swiss National Bank, looking to cut rates and likely going into neutral rates pretty soon, so an interest rate of 0. So I think we could benefit quite nicely on any sort of rally back up in this market, looking for a correction of the sort of pre-tariff news or pre-tariff move. So yeah, again, very simple. Pound yen was what we were in last week again. I still like this trade idea. The analysis hasn't changed. Again, the only reason I closed it was just so everyone was safe over the weekend, so we didn't get to market open and we all hit 2 stop losses on Euro, Swiss and Pound Yen. So I am looking to re-enter this potentially next week if we can see some sort of setup develop. But right now, there's really not much there for me. Dollar CAD, I think, could be a great one as well. Now, this one would just purely be a momentum trade, as well as oil obviously is appreciated massively over the past couple of days. So if we can see the Canadian dollar continue to benefit from that, the Canadian economy is doing pretty okay. It's obviously not great, but it's better than the US right now in terms of fundamental data. I think this would be great to just, again, capitalize on the overall trend. I think it would be very silly, really, to start buying this market. If you're a bull on the dollar, that's completely cool. But we can't deny that this is, bears are in full control right now. So I'm happy to join them at some point if we can see an entry form. Silver's beautiful, actually. Really, really, really good setup here on silver if we can get this pullback. So again, looking for this fib pullback into the sort of 50% level. Also, potential retest of these lows. 200 moving average might come and help sweep price a little bit. So if we can get this tap, I'd be looking to take silver into around $40. I've been talking about the $40 mark for a long time on silver. It's been sort of the main target I've had. But yeah, it's just not quite there, but maybe we can get that push. Well, I mean, the momentum is clearly on our side. The other option is if we can come back into sort of these highs around here. This could also be an option, but that would be slightly too aggressive for my liking. I'd like to see a bit of a deeper pullback there. Gold, I mean, you know, is there anything else to do other than buy this market? I don't think so. It looks a bit more like a shit coin on deck screener right now, other than, you know, rather than a precious metal, but hey ho. So again, I think gold is going to continue to climb higher. I mean, I was temporarily bearish on gold, but that idea has slightly changed over the past couple of days. Obviously, with weaker US dollar data, we've also again got Middle East tensions starting to flare up a bit. So I think gold's got some more factors to continue higher now. So in my case, or in the case I'm looking at here, it's more just waiting for a break, retest, continue higher. There isn't anything else I can really see here. I think the only other option would really be to wait for a deeper pullback on the H4, which is also possible. So something like this, again, just testing this 200 moving average, and again, we'd be going long here. Sort of similar to what we've seen previously, where price comes back down into the moving average, just to sort of, whether it be a mean reversion or whatever, it doesn't matter. Profit taking, whatever is cool. But either way, I think buying gold right now is sort of the only option I've got for this market. Dollar yen, I'm mixed because I'm just going to quickly shift over to the dollar. I feel like I'm sort of bouncing off ideas quite a lot at the moment. But I still want to be a buyer of the dollar when we get to sort of 96, 95. Now, this may not be a fundamental reason. Obviously, I need to wait till price gets down there so I can obviously sort of recalibrate and come up with what is a good idea. But if we just look, I mean, I've been talking about this for a while now, but the cycles on the dollar are very, very repeatable in terms of we have a pop, we have sideways, and then some decline. Same thing here, sideways decline, pop, sideways decline here. Are we going to have the next pop? I mean, this is a 17-year trend. This cycle just repeats and repeats. So whether we're going to get that, maybe. If we do, I would love to be in that move. Again, round 95, 96 on the dollar, I think would be great. I'm not really wanting to be a huge seller on the dollar. We are already in sells on the dollar with our dollar Swiss position. So if I was going to sell the dollar, I would need to see these weekly levels start to break. So break out of this 17-year trend, break out of this weekly support at sort of 95, and then maybe, dollar yen, we'd start seeing lower prices. I'm still bearish on dollar yen over the long term. I'm still very bullish on the yen. That Swiss yen short idea I've got and been talking about is still in play. It's just obviously recent markets and recent BOJ developments have postponed the timeline for that, unfortunately. So dollar yen, I've got no set in stone idea just yet. I more want to see what's going to happen with the dollar. Pound dollar, euro dollar, pretty much the same. So euro dollar, I'd be more happy to go in for a short-term buy, obviously selling the dollar. So if we can get a pullback into these previous highs, break and retest, I'd be happy to just buy trail stops aggressively, and I wouldn't be having huge targets. I don't think it would be more just a case of trailing stops and waiting to be taken out by any dollar strength that we get. But the market's very clearly in an uptrend. I don't want to try and fight this right now. So again, pretty straightforward. Euro yen, New Zealand yen, similar ideas. I think I put the analysis out for this last week. So I wanted to buy Euro yen, but unfortunately we didn't have any pullback here. So we've got two options. Again, we'd either be waiting for this pullback into the 50% retracement, or I'd be waiting for the break and retest of these highs, something like this. So they're the two options. New Zealand yen is exactly the same setup, so I won't go over that one again. But yeah, the yen, with the recent BOJ developments, with them essentially not being in any rush to hike rates at all, has really put a dampener on his yen bulls. So long term, I'm still looking to buy it, but again, short term, I just don't really see anything that warrants buying the yen, to be perfectly honest with you. So that's the setups for this week. It's tricky because, again, at the moment, things seem pretty stable in terms of the Middle East conflict, but if we do start seeing escalations with the UK getting more involved and the US getting more involved, then yes, it could very easily become something a bit more concerning. in that case, we would want to run to buy gold. We'd be running to buy dollar, buy yen, buy Swiss, sell risk assets such as New Zealand dollar and the Australian dollar. I'd also be looking to sell the S&P short term just for some sort of momentum trades. But yeah, that's it. Right now, that's not the case. So I'm sort of expecting things to sort of stay as they are. But yeah, we'll see. If that's the case, we're getting drafted. You know what? It wouldn't be a surprise. If I get a call or a knock on the door from some army guy saying, James, you're getting deployed to Israel, I'll see you guys there. we could play some poker or something while we wait to get drafted. But guys, that's it from my point of view. If there is any questions, please drop them in the chat. If you want me to cover a specific chart or you want me to go over something again, you're more than welcome to ask. I'm just going to take a drink. Just give me 1 second, and then I'll be back for a minute. Okay, so something I just want to leave you with is I'm away tomorrow, and I'm going away on Wednesday. I'm flying to Miami for a week. So if anyone's in Miami, feel free to hit me up. We can grab a drink. But I won't be around that much. I'll still be here, obviously, but I just won't be as active as normal for this week. But I'm back next Thursday, so yeah, there's that. I'll try and keep up with everything. It's a business trip, not a holiday, so it should be a case of everything stays the same as normal. But guys, have a great one. Enjoy the rest of your weeks. Again, if you've got any questions, let me know. You can put it in the chat. And yeah, enjoy the rest of your weekends. See you in a bit.